Today is Tuesday, folks, November the 3rd, 2020, and we're looking at an interesting play today. This is a earnings play post earnings. So generally speaking, we want to put these trades on whether it's a strangle or a spread, what have you. It's a credit trade. We put it on when IV is incredibly high. And then we look for that IV crush after the earnings comes out, try to find an expected range that we will feel comfortable putting our wings in, et cetera, et cetera. Today's trade is a little bit interesting because it's W, which is Wayfair. This thing has just absolutely been on a tear. This thing has just been incredible. Here's a $17 stock that in a few months went to $350 a share. Now, we are in a decidedly down trend right now in this stock. We're down below the 50-day moving average. You can see just that perfect technical setup of lower lows and lower highs. But anyway, they reported earnings today before the market opened, and it was a blowout. Blowout earnings, just absolutely just killing it. They could not have been doing any better than that. But as is so often the case with stocks like this, expectations are sometimes higher than the actual amazing results. And so we're seeing a little bit of, we're seeing a lot of fluctuation here with Wayfair. If we pull in here, here's today's action. You can see it absolutely has this massive spike. It has this big drop. And we're not quite flat on the day. We're up about $5 right now, but it's been hovering around that flat area. Now, the key thing, of course, in any of these trades, and we are trading the November 6th expiration date, just 3 days to expiration here. The key with all of these trades is this IV crush, right? And we're getting it. We're getting it with this trade, but it's coming slow. 150%, 155% was the IV this morning prior to the news announcement, which is sort of something that you would expect to see in a scenario like this. It's obviously coming down now, about 90%, but it's not coming down as much as I had thought. I would think we would be in the 70, 80 percentile range right now. Still really, really high IV. Still bouncing around a lot. Our position here that we put on is don't mind the difference there in the contract size. I fat fingered the put order there. I don't know why I thought I had 41 contracts on the call side. I actually have 42. But nevertheless, we're in at 270 on the calls and 225 on the puts with a $10 spread on these. We're just looking for a one-day trade on this. To sort of scalp some theta on this. This is a $42,000 trade, bringing in almost $12,000 of premium, but generating about $1,200 today of actual theta. And we would just like to capture that. So if we could be up $1,000 at the end of the day today, that would be great. So we will check back in here a little bit later in the day. Okay, I'm a little bit late on this update, but we made some adjustments here on the trade. Wayfair is pushing up to that 270 level. They actually pushed a little bit above that, 272 or so. Of course, our short strike on the call is at 270, so we're watching that closely. We may need to adjust the call leg on there. There's our call leg right there that we put in, and brought in $2.18 on the call leg. So we've got a little bit of a buffer room there, but not much on the call leg. But then we did add some puts. We had some puts at 64-cent credit. These were down at the 225 level. I went ahead because Wayfair is strong now. It's coming back. Went ahead and closed those out at a nice profit. We sold them at 64 cents. I bought them back at 35 cents, and then I rolled those puts up to the 260 level. Brought in a ton of premium on that one. Brought in $2.15 on those. So that helps buffet a little bit on this upside as well. So that's where we're at right now. Probably going to need to do something on the call side here shortly. So we'll just watch that. So pushing up past that 270 level, we're at about 275, 276 right now in that area. It's slowing, but we're still sort of pushing up against that. So we went ahead and we rolled out those calls. So I closed down the 270 by 280s at a debit of 525. That's a loss, obviously. We put those on at 215 or 218, take them off at 521. We got this extra premium that we brought in here on our puts. And now we're selling a new set of calls up here at the 300 level, 300 by 310, bringing in $1.07. So still ahead of the trade theta-wise, still ahead of the trade extrinsic value-wise. We just need to see where we're going to end up here as we get closer to the cash close today and whether or not it's something that we feel comfortable holding overnight. Okay, guys, so there's the closing bell on the day. And I want to go through my activity for the day. I want to not just recap the W trade, but I want to recap the main trades that we were working on here as a group, which was namely my E-mini trade, my overnight E-mini trade, my SPX trade, as well as, of course, the W trade. So let's just get started with them. The E-mini trade went great. The E-mini trade. So we've got some great. We've got some good, and knock on wood, so far we don't have any ugly yet in our trading today. The E-mini trade, you can see that went on last night, 11 p.m. at night. We're just getting a really strong follow through again, and so I just sold the put leg on that, brought in a 225 credit on that, and was able to close that out today at $1.25. I believe that was about an $11,000 trade with about an $1,100 net credit on that. So about a 10% cash-on-cash rate of return on the day. That was a great trade. That was an awesome trade. The next trade that I closed out was, let's see if we can find it here. I believe it was this SPX trade. No, that's a credit trade. Let's see if we can find it here. Okay, that is the trade. I'm so used to credit trades, and this, of course, was the debit trade, right? So this SPX trade right here was the freebie trade. I will call it the freebie trade, where we just used some profits off of one of our zero data expiration trades to buy this debit trade to the downside. Should have probably been more aggressive with that. That's sort of the give and the take, I guess, with a free trade where the only thing that you're putting at risk is the profits on the trade. Sometimes you're not as diligent on them as we should be, and that was sitting at a really nice profit. It was actually in the money at one point, but I think that I put about $2,000 into that. If we look at doing a similar, we're looking at reversing it now, and so it's going to show buying power of about $8,000. But I think that when we purchased that originally, rather than selling it, when we purchased it, it was about $2,000. It took about I think $5,000 profit on that particular day, and we used $2,000 of it to buy that. So I was able to capture some of that back into a profit, and we're out of that trade. Now the W trade was busy today. We initially down here, we put in the call leg at first because that was the strong leg. At the open here, W was actually falling. And so, our rules dictate you put in the strong leg first as we leg into these trades. Put it in at 218. Thought that was a great fill. Followed that up, and then it started to come back on us. And we followed that up with putting in the puts. Not a great fill on the puts. 64-cent credit on the puts right there. And so very quickly, we needed to roll those puts. So you'll see the next transaction here is we are closing those out. We closed them out at a profit. We sold them at 64 cents. We bought them back at 35 cents. And then we rolled them up in price here to a credit of $2.15. We rolled from the 225 level all the way up to the 260 level there. on the put. So we rolled those up. That gave us a little bit of ammunition here to be able to close out the call legs at a loss, at a debit of 525. Then we reopened those at a higher level as well. Closed out the 270s and reopened up at the 300s for a dollar credit, $1.07 credit. So if we look at all of that at the end of the day here, a little bit confusing if you look at all of the different columns that we have here. Let's just kind of go through them all. So right now at the end of the day in this trade, I have $42,000 of capital tied up in that trade. That really hasn't changed at all today because I haven't altered the number of contracts that I have done. I haven't levered up or down on the contract size. So it's been 42,000 all day today. Brought in a total of about $13,500 in credit, and there's still $8,500 of extrinsic value sitting in that trade. So I'm up $5,000 on the current positions, as it is currently constituted, but down $6,700 on the day. That's reflecting the trades that are not currently in our account, right? It's reflecting primarily that call option that we had to close out at a big debit, right? But the key here is I'm down $6,700 on the overall trade, on the overall W trade. Got $8,500 of extrinsic value sitting out there. I've got potentially $2,000 of profit sitting in this trade. It's about a 5% cash on cash rate of return. It's a little bit lower than I would hope on a trade like this, but it's not out of the realm. In other words, if I ended up with 5% profit on the trade, that would be fine. That would be great. So far, knock on wood, that trade is still solid. We've obviously closed for the day today. We can take a look at where we're at in the curve analyses on this. And, you know, it's always a little bit worrisome, right? Let's get rid of this trade that's loaded up here. And you can get there we go, get a little bit better look. It's always a little worrisome to hold overnight. Definitely a little worrisome to hold overnight when we got an election results that's probably going to be very contested at the end of the day. But boy, the market was sure strong today. And W is a little bit like it's kind of like Tesla a little bit in the sense that it kind of trades on its own. It doesn't really have a huge correlation to the overall market. You know, if Apple's down, you know if Netflix down, that the Nasdaq's going to be down, right? As those stocks go, so the market goes. Not necessarily the case with Wayfair, and so I do believe this is a lot of times we prefer, if you have to hold something overnight, to hold an index rather than an individual stock, because you don't know what any one individual stock's ever going to do, and you get a little bit more, I think, comfort level with owning, you know, the S&P 500, a basket of 500 stocks, right? I think here we're probably okay. Obviously, a little closer to the put side than the call side, but pretty well positioned, I think, going into tomorrow. And still, you know, $8,500 of extrinsic value just sitting out there in that trade. And the big thing that we saw today, which was interesting to me, as we look at these options, we started yesterday, right? We started yesterday at the close because the earnings announcement on W came out this morning before the market opened. So we started yesterday at, I don't know, some crazy number, like 170%, 180% IV, something like that. This morning, even after the announcement came out, right as the announcement came out, you know, so you usually start to see that IV crush take place pretty darn soon after the unknown becomes a known. It didn't really happen today in W. We were at about 155 or something like that, 155% IV this morning, and it has just slowly and methodically come down today. If you would look at the money options, you know, it went down to 90 and then to 85 and then to 80 and then to 75. It dipped very, very shortly. For a very short period of time, it dipped into the 60s, but we're still just hovering around that 70 level, 71 or so at the money option. And so if we could get a drop tomorrow, if we could see theta, or this implied volatility rather, drop from this 70 range down to the 50 range, that would be tremendously helpful for our trade, right? We're not just, so often, when we talk about theta trades, and that's kind of the phrase that we use, right, is we try to put on this delta neutral trade and just stay delta neutral as much as we can, and then let the passage of time do its job. And that's true. This is in a good essence, this is a theta trade. That's what we're doing here, is kind of just trying to capture that time erosion. But the reality here this is more of a Vega trade, right? This is more of a Vega trade than it is a theta trade. We're really looking more for that volatility, that IV crush to take place. And so hopefully tomorrow we'll get a little bit of both of those helping us. We'll get a little bit more theta erosion. We'll get that, hopefully some volatility crush going on, pushing that down as well. The good news, I guess, with this W trade, number one, of course, is that even though I'm showing red here, right, red for the day, I'm still in a profitable position. Still got, $8,500 of extrinsic value there, offsetting $6,700 of a red loss for the day. So I guess that's good. If you want to try to find the good in that, that's the good. The other thing, though, is that we've only got, we will have tomorrow. We will only have 2 more days left in this trade, right? After Wednesday, we'll have Thursday and Friday left in this trade. So 3 days, essentially, to manage this trade. That makes this trade a lot more adjustable, okay? If we get into this trade late tomorrow, Wednesday, or Thursday, and we need to adjust it, we can adjust it. And we only need to go out a week to adjust it. A little bit different than if you're in a 30 to 45 day iron condor and you get buried in that trade. How do you get enough credit to adjust a 30 to 45 day iron condor? And you're probably going to have to go out 90 days or more on that trade, right? And now pretty soon you find your portfolio full of, the portfolio that you were doing 30-day iron condors in now has a bunch of 6-month iron condors in there, which may or may not be a bad thing, but in today's marketplace, boy, I don't like to have 6 months of exposure to really hardly anything, right? So there's our review for the day, guys. Obviously, we'll be back tomorrow to see where we go with this W trade. Have a good trading day. Have a good night, and we'll see you.